So here we will take a look at the two important characteristics of leverage inverse ETF, and I will explain why I keep saying leverage inverse ETF are short-term trading tool instead of buy and hold long-term investment. So usually the most frequently asked questions about leverage inverse ETF is what's inside of leverage inverse ETF. The components inside of leverage inverse ETF in the world are very similar. So they are a combination of cash, equities, and derivative. Typically use swap contract or futures contract. Leverage inverse ETF listed in US market usually use swap contract. For example, Directions, all the Direxion leverage inverse ETF is a swap-based leverage inverse ETF. So as you can see from the table, a daily 3-time leverage ETF, inside of 3-time leverage ETF is cash, equity, and derivative. A daily 3-time inverse ETF is composed of cash and derivative only. The most important thing is leverage inverse ETF in the world are daily based. For example, a daily 3 times leverage ETF is designed to provide 3 times of the index daily return, not 3 times of the index more than 1 day's cumulative return. So this is a very important features you have to know about leverage inverse ETF. And single stock leverage inverse ETF, this kind of ETF are operating under similar principle to the general leverage inverse ETF, except that they are not tracking indexes, but tracking the underlying share of the respective stock. Therefore, single stock leverage inverse ETF have additional concentration risk and may be more volatile than general leverage inverse ETF that are tracking indices. Here are the most important two characteristics of leverage inverse ETF. The first one is daily rebalancing, and the second one is implication of compounding. For 3 times leveraged or bull ETF, daily rebalancing process is usually done nearby or at the daily market closing time to ensure this ETF track as closely as possible to 3 times of the benchmark's daily performance. This daily rebalancing causes compounding effect when calculating the total return by holding leverage and inverse ETF for more than 1 day. So trending market favor leverage inverse ETF with daily rebalancing and compounding that will amplify the long-term return. However, the compounding effect will work against long-term holding leverage inverse ETF in a choppy market. So the key point and important takeaway here is the performance of the underlying index. The performance of leverage and inverse ETF definitely is based on the daily price performance of their underlying index. And second of all, holding leverage and inverse ETF for a period more than 1 day definitely will impact will be impacted by the effect of compounding. And trending market favor leverage inverse ETF with daily rebalancing and compounding that will amplify long-term return. But if the compounding effect of the daily return works against holding leverage inverse ETF more than 1 day in a choppy market. So please keep in mind, trending market favor leverage inverse ETF. You want to buy and hold leverage inverse ETF for more than 1 day. But during the choppy market, please don't buy and hold leverage inverse ETF for a long time and without tracking the performance of your leverage inverse ETF. And here let's take a look how sophisticated investors use leverage and inverse ETF. So leverage inverse ETF are ETF, as I just mentioned, but this kind of ETF are designed for long-term. This kind are not designed for long-term buy and hold. This kind of ETF are, for iShare and Vanguard ETF, that kind of ETF are designed for buy and hold unadjusted. Or like you buy mutual fund, you buy US Treasury, you can take that kind of asset as long-term investment. But left reverse ETF is like how you trade futures. It's impossible for you to buy and hold future contract for more than 1 month, 2 months without the rollover of the future contract. So left reverse ETF, kind of similar concept. They are not core investment tool. They are satellite trading tool. So for trading tool, definitely you won't take them as a buy and hold in your portfolio. So according to our survey, for 3 times leverage and inverse ETF, the average holding period is only 3 to 5 days. And for some leverage and inverse ETF that tracking volatile indexes such as semiconductor indexes or technology sector indices, and the 3 times leverage and 3 times inverse adding on that kind of daily return. You can imagine how volatile that kind of ETF are. So for semiconductor 3 times or semiconductor 3 times inverse ETF, usually we also see people do a lot of intraday trading, or like or just holding that for 1 to 2 days. So please remember, for left reverse ETF, if the leverage ratio is higher, the holding period should be shorter. Okay, so here, after you understand daily rebalancing and daily compounding, now you should know left reverse ETF are not suitable for every investor. They are appropriate for sophisticated or savvy investors only.